Hello, everybody, and welcome in to Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today I'm welcoming two guests to the program, Brad Rourke, CEO, and Thomas Mumford, President of Scottie Resources, a company focused on near mine high grade gold targets in the Golden Triangle of British Columbia. Gentlemen, it is great to have you both on the program.
Thanks, Jess. Thanks for having me.
Appreciate the time.
Well, let's start off with the macro of gold, and Brad, will go to you for this. I'd love to get your current overview of the gold space. What are the main trends and catalysts that you think have brought us to where we are today? And if you had to venture a guess, which inning of this gold bull market do you think we're in right now?
So, my view on gold is I've never was typically a gold bug, but in 2015, when I first got involved in here, I had a view on gold because it had, about 4 or 5 years, and I thought it was time to come in into an unloved sector. Here I am 10 years later. But I think the thesis was correct, and gold was $1,100 in 2015 when I first dipped my toe or wrote my first check to this project. And what I saw is massive amounts of money printing, and that would have been the Obama era. And there was an extremely amount of money being printed. And I'm a pretty simple guy, and I was like, okay, well, gold's going up, as so is my phone and my car and everything else. But and gold has always been a way to protect your wealth, not to grow your wealth. Well, gosh, you could have grown your wealth buying gold, but that's not how I viewed gold at that time. And I was really interested back then because the Basel III is something that we talked or read about for a long time, and it had stages, but you knew that final stage of Basel III was going to happen. And I think in my mind, I probably thought it was going to happen earlier than that final stage because it was probably only a couple years ago. And again, not a super expert, but follow these trends. And the basis of that is you can value an ounce of gold at its market price from a central bank balance sheet, which in the past it was about 50%, if I'm correct now. It might have been staged up, but I saw that as something that was very interesting to me because is that going to, with all the money printing going on all over the place at the time, but it was Obama really just doubled that debt, much like we've done to Canada as well. So that's what kind of got me interested in, and then central banks started buying gold at around that time, and now that's accelerated, and so that's what I look at. Right now I go and we're going to talk about a whole bunch of theories that may or may not happen, but the fact that these central banks around the world, and particularly ones outside of the G7, are all starting to repatriate their gold, buy gold, and to me that's a big signal. You're going, okay, something's going to happen here. Things that have happened. You're going some of these catalysts that are different. Now I come from an energy background. I had my success in energy. And the petrodollar was why the reserve currency is what it is because of the deals they made to Saudi Arabia a long time ago. But also within this time of when, now we're getting a little bit closer to recent, the United States took Russia off the SWIFT system, which I went, uh-oh, I understand what you're trying to do and such, and I have no view, and I'm not going to portray whatever my views are. But I was going, oh, you're going to force somebody to go find an alternative. If you can't trade within that, the SWIFT system, which is the international way of moving money around, so to speak, to make it simple, you force the BRIC nations. And one of the things, again, being an energy guy, they started trading gold for oil, and that has never happened before. And I don't think we speak enough about it. And or that this is what excites me, or not excites me, but just really makes me sit up straight. So these are things that have happened that have never happened before. Yeah, and I think that's big changes here because if we're trading, if those BRIC nations are actually trading oil for gold, that is going to accelerate, the inevitable. I mean, all currencies fail when they're fiat currencies, and but I don't take this view that it happens tomorrow and grief-stricken poverty is everywhere. but it is the winds are shifting, and that dominant currency, we're all going to have to come together as a world and decide on what we whenever whatever units come. But these things are going to happen, and it's going to happen in my lifetime. Now, it could be as early as 2 years, 3 years, or 6 years. I don't know. But I see that moving in that direction. So I'm very happy to personally own gold. And it's done a lot better than I've ever could have imagined. That being said, my equities haven't done anything. So, these are things that can drive one crazy at night. But I think those, the catalysts that are really driving that price of gold right now. And I would say that, I was asked last year for predictions. I can't make predictions. I'm wrong all the time. But I've been making predictions for 35 years with my own money. And so, I've won and I've lost a lot of things. But I remember perfectly last year around October, someone said, "Oh, your price of gold." I'm going, "I don't know." But I just said, $3,300. And the reason I said that is I just took 24%, of which that's what the gold price was in 2024. I just added 24%. I'm going, well, gold should have went down as far as all the educated people last year in 2024 because interest rates are going up. And so is gold. Another thing that's very interesting. But what we can be assured of is, or I believe, or I bet lots on, interest rates are going to go down, which is historically a bullish thing for gold. So we didn't get penalized when interest rates moved up, but I do think the party continues, or the underpinning of what that commodity is going to be worth is as we see interest rates going down. So I think that answers your first question. I'll leave it there.
Yeah, absolutely. And that's interesting to note that gold went up in the face of both a strong US dollar and rising interest rates, both things that traditionally are not the case. And I also agree that when rate cuts do happen, that is going to add fuel to the fire. Now, the question of gold revaluation has come up with some people I've spoken to recently. I've had a lot of varying opinions on this matter. Everybody from Alistair MacLeod, who said it's never going to happen, forget about it, to Vince Lancy, who says it must happen, it will happen, and everywhere in between. Now, the Federal Reserve recently released a note called Official Reserve Revaluations, the International Experience, which described how 5 different nations used gains in their gold reserves to raise funds. This has led to speculation that the Fed is considering the same thing. In your opinion, is revaluing the US gold reserves a realistic proposition? And what would the implications of such a move be?
So the answer is yes. And I've been thinking about that a long time now. The implications, whatever I say, there's a lot of unanswered questions I can't, and I've put a lot of thought into these things. So I'm just going to look at, I wrote down some news. So, yeah, so we have these other countries that have kind of repriced their gold on their balance sheets, but they're, you know, and I'm not an expert on that, but I know, like, I think Italy, Belgium, and a couple other small countries, but Italy only took a small portion of their gold and moved it into some pot. I think yes, because gold's valued at $42 or what be it, the 8,000 tons or 26 million ounces that the US, says that they have. So what I can't get my head around is sure, it's an easy, we all want the keep things simple. Hey, you could revalue your gold and let's just pick a number because again, there's 100 numbers out there because there's a lot of people that talk about this. But I'll just make it real easy math. If there's 26 million ounces of gold and we revalued it to $20,000, I'm just picking that number out. That gives you $5.2 trillion. Okay. That doesn't fix the problem of a $37 trillion debt, but it is a pathway to perhaps solving a few problems. What I can't get my head around is the government just can't revalue the gold because at the end of the day, you, me, Thomas, we all have at least 10 ounces of gold in our house, right? Anyways, certainly, so gold goes to 10,000, 20,000, whatever, or let's just go spot. If you go spot, is that float then? Is your balance sheet float? That doesn't make sense to me. But if you did charge, let's say they tried to revalue the gold, call it 20,000. Again, I'm just picking that number out. It's probably be way less than that. That means, or I believe, and if somebody else could come out, well, then I'm going to just go sell my gold that day, right? Or and so how do they buy the gold? They sell more treasuries or they print more money. which is an interesting thought because if the US wanted to devalue their dollar, no better way than print a whole bunch of money and buy as much gold. So could they? So it's unprecedented. It's never happened before, and it's a theory, but eventually there's going to have to be a reset because of the petrodollars changing. That's my real underlying theory. And the US isn't going to get the dictate. Now they're going to have a bunch of influence, but you have the other side of that equation, which is China, of which probably has more gold than we think that they have. Uh, so yes, there could be that revaluation. So everyone's on a fair playing field. But as you can see, and the president of the United States, he's projecting. He wants to devalue their dollar. How are you going to pay your debts? It makes a lot of sense. Other countries have done it our whole lives, Japan, China, and such, right? It's beneficial. Now, as Canadians, we should be really scared. And again, not enough Canadians are talking about if they devalue the US dollar, it is really a big problem for Canada because we can't compete at a 70-cent dollar right now. So the answer is yes, but at what price? And I just, this is the part I can't get my head around because if I am right, then they'd have to start buying gold from everybody because you go too high. Why wouldn't I sell it? Right. So
Yeah.
that's the part. But I do believe it's a really complex problems. I mean, $1 trillion isn't even a real number, and we got $37 trillion in debt in the US. So it's complicated, and I'm sure there's a lot of real smart people working on that. But I do believe gold is rare, much like a Van Gogh costs a whole bunch of money because it's rare. Gold is rare. There's about a half ounce per person on the earth, and that's kind of the same for the last couple thousand years. So I think it's a great abacus or a great stone to put value on. But again, we're not going back to a gold standard by any stretch of the imagination. But I think there'll be some sort of unit, and the commodities in general will probably have a lot to do with the revaluation of how we're going to trade in the future. But these things could take a long while before they play out. But yes, revaluation of gold makes sense. Just at what price, I'm not sure.
Well, let's pivot to the gold mining sector because for the last few years, the complaint has been that it's not keeping pace the way it normally does. It's not providing a levered play on the gold price. It's kind of dragging its heels as gold reaches all-time highs. It appears that that started to change this year because year to date, both the GDX and the GDXJ are outperforming gold by quite a wide margin and massively outperforming the broad market. Do you see this as potentially the beginning of a major bull market in gold equities? And if so, how long and how high do you think it could go?
Sure. So again, difficult questions. We've probably been in a gold bull run compared to who you talk to since 2000, right? I mean, if you look at the last 25 years, gold outperformed the S&P. Now, what inning are we in? Now, gold has really rapidly gone up since we broke 1374 in 2019 or something like that. And that gold price has moved quite well. So from that point of view, what inning are we in now? Yes, GDX and GDXJ have woken up in the last year, but they're still just catching up to the actual commodity price. So we're early from that point of view. I think a lot more room to run. You know, is it only Newmont or is it Barrick? I'm going to get this wrong. There's only one company in the S&P, right? And you go, fund managers are not buying gold. Most fund managers are younger than me. My next birthday is 60, but look at who's running money in New York. These kids have never bought a gold stock before. Now, they've been living quite well with their bonuses on the Mag 7. This is turning. They're going to be forced to buy. These fund managers, in my opinion, are going to be forced to buy gold equities on the simple fact that the free cash flow is extraordinary. And these majors and mid tiers are extremely well run, which is a total departure from perhaps 10 or 15 years ago, where they were just a bunch of miners and going, spending money like it was crazy. So I think we're early innings. I believe that GDXJ is just a signal, right? They're kind of catching up to an extraordinary run in the price of the actual commodity, and yeah, I feel good about those things. And then you have to look at all the companies like ours we're not in the GDXJ. I mean, at the end of the day, those are mid-tier companies, and so there's a lot of room for good run smaller companies like us that are going to fight to get ourselves into that indices because that supports you so much at having that passive money trading. So I think there is a whole host of great companies out there that we're not getting recognized, but that trickle down effect because of just the free cash flow. Lots of M&As are happening where it's getting harder to see who's going to take over who these days, right? Because there has been a lot of action in that. So I think, we are at the beginning stages. And, now I can't see 5 years ahead, but in 3 years, I don't see this getting taught any lessons. I get taught lessons all the time, but, I just don't see because I just see more money printing coming. There's no other way out of it, and the Fed's trapped, right? I mean, we've been saying this forever, but I mean, I think we're in the ninth inning of that part of the game, and lots of room to grow here because we've got these basket of seven companies that are pretty much the whole market, and they're rolling over a bit. There's still the difference between 2000 and now is gold was low and all these tech companies were very high. I actually ran an online grocery store before the dot-com bust, but I came from mining, so I kind of have this view. But now the gold price is 10 times, 15 times what the gold price was in 2000. But the other difference is tech companies make money and they didn't make money back then. So, but there's just a lot of hype on these things and a lot of uneducated people. It's just computers trading now, and so. I think, yeah, the future's good, and I think real value, hard assets is everything that I'm in, and I'm an anti-debt guy at this stage because I don't know what's going to happen. So I think, we could go a lot longer. Now, how far can it go? I don't know. I'll have a new piece of information tomorrow that news will tell me, and I'll adjust my thinking. So, but I think in the next 3 years, I just don't see where I get derailed on my theories.
Yeah, I completely follow you there. And it's interesting to note the broad market, you have a lot of people talking about how overvalued it is. It does seem to keep grinding higher, but by all ratio, you look at the CAPE ratio, the Buffett indicator. I mean, there's so many things you can look at. Howard Marks in his latest memo actually came out and said he finds current valuations worrisome, which is actually incredible for Howard Marks to say because he's usually very reticent to make any definitive statements. He's very careful how he couches his statements. So I think that's significant. Why don't we shift now to discussing Scottie Resources and perhaps start by giving us an overview of the company? Thomas, did you want to handle this one?
Sure. Yeah. So we are a junior mining explorer right now. We're a gold targeted company. We're located up in BC in the Golden Triangle area. So in the southern portion of the Golden Triangle, we're in an area that has multiple mines operating in the area. So we've got Ascot to the south of us. We've got Bruce Jack, which is owned by Newmont just to the north of us. Those are our two largest neighbors. One of the things that changes us or differs us from the others in the area is that we're kind of coming into an area that already has the infrastructure built in. So one of the biggest impediments to any project operating in the Golden Triangle is you got to put this power line in. You've got to build this road. That's already done for us. So the road goes right up to our site, and we're drilling right off of the road where our new deposit is found. So it's called a Blueberry Contact Zone. So we're in an area that has exceptional infrastructure. And then one of the things that really differentiates us is that we're looking at a direct shipping ore model. So shipping a product out without having to mill it, without having a tailings facility. And what allows us the opportunity to do that is that there's a deep water shipping port just 40 kilometers down that road I was mentioning. So we've got the infrastructure in place. We've got this exceptional opportunity, and our deposit supports it. So that's where Scottie sits right now.
Can you guide us through your main portfolio of projects and highlight the progress made so far, next steps for them as well? And also, if you could provide a little more background on the Golden Triangle and its history as a gold producing region as well, that would be great.
Okay, so the Scottie portfolio of projects, all our projects are located in the Stewart area, which is the mining camp in the area. It's road accessible from the rest of British Columbia there. Starting at the kind of the most grassroots stage, we would have our Cambria project, which is a large land package. The big status on that is we're doing grassroots exploration, we're doing field sampling, we're out there mapping and doing geophysical surveys on that. And so that's a more of a polymetallic system that we're exploring for. So multiple commodities, like you're looking at silver, copper, lead, zinc. That's what we're looking for on that project. The next most advanced one, which is where I would say is at like an early drilling stage. So it was a past producing mine. It's called the Georgia River Project. It's a classic quartz vein system. It's got super high grade gold. There's a non-compliant resource of 200,000 ounces at 20 grams a ton on that. And so we've drilled that for a few seasons, and the next round of exploration on that would be further drilling on that and trying to expand and get a compliant resource out of that project. But really our biggest project is what we call our Scottie Gold Mine project. And that's where 90%, 95% of all our exploration dollars go into these days. And that's what we've been really leaning on over the last few years. And that project has advanced very rapidly over the last 3 years. And now we're turning a corner and we're now looking outwards and going, is this going to be a producer? And we're making that transition now to say, like, how do we get there? What does that look like in terms of exploration work? Right now, we've got 4 drills at site turning. So we're drilling 25 to 30,000 meters this year. We're permitted for a bulk sample. So we've done our first blast on that bulk sample. We're going to do a second. Just for context, the size of the bulk sample is about 10,000 tons. And we're hoping to generate, in the order of 3,000 tons of mineralized ore from that. And then, we're planning to operate it just as we would a DSO project. So a direct shipping ore, we're going to ship that mineralized rock down to the port in Stewart and try to ship it out from there and capitalize on that. We've started baseline environmental. So looking ahead to like, what is it going to take to be permitted in the area? We are going to have to advance on that front. And one of the ways to do that is do the environmental studies to understand the impact on the nature in the area. And that informs the permitting process with the government. So that's been initiated. That's a minimum of 2 years in environmental work before you can get a permit amendment. And then the other thing is we're looking at the economics and the engineering of actually developing this project. So that's going to form the base of a PEA, a preliminary economic assessment, and that'll be due out in October-ish this year. We'll have the news release out for that. And then the final product from that will be out in December. So the engineering, the economics we're right in the middle of that this season.
Fantastic. And any background you could provide on the Golden Triangle as a historic gold mining district? And you mentioned the requirements to get a permit there. What is your relationship like with the local government and community?
Yeah, the Golden Triangle's been a world-class site to find and exploit mineral deposits in the area for over 100 years. So you have Eskay Creek, which was one of the big mining staking rushes in its day. It was one of the highest, at the time, it was the highest grade producing mine in the world. And now you've got the other side of that, which is KSM, Seabridge's deposit, which is the world's largest undeveloped gold deposit, which is, I don't know what the number is. It's over 90 million ounces of gold in the project now. It's just unfathomable, really large. So you've got this area that has world-class grade and world-class size, and these aren't even all the same deposits in terms of geological models. You've got one that's copper porphyry, you've got another VMS, you've got epithermal gold systems like the Brucejack mine, which is one of the highest grade producing mines, underground mines. And then you've got Scottie underground intrusion related gold. So you've got all these world-class deposits of varying different styles. It's just a very fruitful area to look for geology. In terms of permitting and the First Nations and our local partners there. So, it's an area that things get done. Like you've got a lot of new projects going on. You've got a lot of advancement. You've got a lot of people spending a lot of money pushing things along. You've got 2 big First Nations in the area would be the Tahltan and the Nisga'a Nation. We are south of the Tahltan, and so we're in the Nisga'a territory, and that's who our main partners are. We're about 10 to 15% of our workforce has been with the Nisga'a over the last few years, and a great relationship with them. So we're in the process of formalizing that, walking towards having like an IBA agreement in place so that when we go to that permitting stage that everybody knows what their stake is.
Fantastic. Well, what is the company's current cash position? How do you plan to put that cash to work? What does your debt situation look like? And how will you raise more capital when needed in the future?
So current cash position is probably in the order of 12 to 13 million dollars in the bank right now. We are in the middle of closing various tranches of a financing. So we've basically filled our $16.8 million financing that's been underway. We are spending money right now as we're drilling. This is the busiest part of our season. So like I said, we have 4 drills turning. So it's kind of in flux there. But I think the last time I spoke with the CFO, we were about 12 million in the bank. And so that'll run us through well into the fall, into early winter with that. And then we're hoping for some proceeds from the bulk sample as well to generate some revenue from that. When we look forward, on the debt side, we have no debt. We're fully paid for. All our land is paid for. We have a 2% royalty with Franco-Nevada that they put on a couple of years ago or a year and a half ago and gave us that in exchange for equity and some cash. We have just closed a deal with Ocean Partners, which is a metal trading operation. They put in 8.4 of the $16.8 million that we were just closing. And in addition to that, they've provided us a construction and cost overrun facility worth $25 million US. But that's for the last mile of the mine production or mine construction. So like we're not opening that debt package up yet. That's for like cost overruns when the mine gets built. And so that'll be post PEA. When we look at what's the next funding solution to go as we advance the project, I mean, we won't be doing any funding until we're well past the PEA stage. So we'll be able to value our ounces in the ground. And so the next tranches of funding probably look a bit of a combination between equity, debt, maybe traditional debt or convertible, and then maybe an additional royalty or a stream on top of it to get us into that construction level financing package.
Well, what are the main catalysts and upcoming news flow that you would like to highlight that shareholders of Scottie Resources can look forward to for the remainder of this year and into 2026?
So the obvious one is that we're drilling a lot right now. So 25 to 30,000 meters. So we've got drill results going to be starting to come out here very shortly. We started drilling at the start of July. So we were just about to be getting our assays back and then be able to release those out. So we'll have a strong news flow of drill results starting in the coming weeks and then all the way through the fall into the early winter. So that'll be the first one. The next one will be the results from our bulk sample. So that's in progress. We've done our first blast. We're prepping up for the second blast. And then we're hoping to ship that out and looking for remuneration in October or November this year. So that bulk sample will be a big confidence boost for us in showing that this DSO project concept works and that can show the valuation associated with it. The biggest news coming out for us will be in the October realm, where we have our PEA coming out, which will be the first opportunity we've had to really show the value of the gold in the ground and the margin associated with that. So because we don't have all these large initial capital costs associated with building a road, you don't have to put the port in, you don't have to power lines. Like a lot of it is already built. You don't have to build a mill or a tailings facility. The capital cost goes way down, and so that pushes up on your NPV dramatically. And so we're really excited to show that.
Excellent. Well, I'm going to put a link in the description below to the Scottie Resources website, as well as social media, so people can follow along with the company. Brad and Thomas, this has been a fantastic conversation. Thank you so much for coming on the show.
Thanks, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.